Good morning, everyone. Well, the dollar is broadly lower Monday morning against both the G10 and emerging market currencies after Friday's weak U.S. data corroborated Fed Chairman-designate Janet Yellen's emphasis on the need for Fed policy to remain accommodative. We had the Empire State Manufacturing Survey for November, which fell to minus 2.2 from plus 1.5. The market had expected it actually to rise to 5. Also, we had U.S. industrial production, which declined slightly in October instead of rising modestly as the market had expected. Now, within the industrial production figures, the fall in capacity utilization, despite an increase in factory output, will probably reassure the Fed that there's no risk of overshooting or even reaching its inflation target, and the risks to keeping rates lower for longer are minimal. As a result, Fed funds expectations continued to decline and the dollar came off further. On the other hand, the main support for the dollar has been changing expectations for monetary policy elsewhere. The ECB is in the forefront of this. It's certainly taken a more accommodative stance with its surprise cut in rates recently, while the market expects the Bank of Japan to ease further at some point in the future as growth there slows. By contrast, the pound, I think, is likely to be well supported after the Bank of England last week revised up its growth and, in particular, its employment forecast. That combination, by the way, suggests to me that sterling yen is still worth looking at from a fundamental point of view. Now, as for today, the economic calendar is really just very light. In the EU, all we have is the trade and current account balance for September. The trade surplus is expected to rise to around 13 billion euros from 12.3 billion in October on a seasonally adjusted basis. There's no forecast for the current account balance. Now, this indicator isn't particularly market affecting, but in fact, the region's large current account surplus is probably one of the main reasons Eurodollar has been so remarkably steady this year. In the U.S. today, we have the National Association of Home Builders Market Index for November. That's expected to remain steady at just 55. For more information, including technical analysis, please read the full comment on IronFX.com. You can also like us on Facebook, follow us on Twitter, subscribe to our YouTube channel, or circle us on Google+ to get more trading ideas. This is Marshall Gittler, head of Global FX Strategy at IronFX, wishing you solid trading.